You are watching Market Watch, the brief overview of the key events from the world of finance. Today's issue will be devoted to one of the theories about the approaching financial crisis. When one of the respected financiers or analysts talks about the crisis, they usually rely on indicators such as inflation, unemployment, consumer activity, or business activity. Much less often we hear about the M1 money supply, which includes cash in circulation, deposits on current accounts and other liquid assets. While the M2 money supply includes M1 plus term deposits and some other types of deposits up to $100,000. Since the US economy is predominantly growing, the money supply is also increasing. But since 1870, we have seen a fifth decrease in the M2 money supply by more than 2%. It is noteworthy that the previous 4 decreases of this indicator by more than 2% were accompanied by a really strong economic downturn. If the first 2, which occurred in 1878 and 1893, were before the creation of the Federal Reserve System, then the other 2 after. The third case of a significant decrease in the M2 index occurred in 1921, accompanied by a significant economic shock in the United States. The following example, which occurred between 1931 and 1933, is widely known as the Great Depression. Now there is a fifth case of a drop in the M2 index by more than 2%, taking into account its peak in July 2022 and data from December 2023. You can say many times that history repeats itself, but sometimes there are exceptions. But Nick Curley, CEO of ReVenture Consulting, who cited all these data, does not exclude the occurrence of a negative scenario. This is indicated by many factors, including high inflation in developed countries and the rapid deterioration of the geopolitical situation. In Europe and the Middle East, military conflicts are in an active phase, which is also an additional risk factor. And with all this, it is necessary to take into account the significant growth of key US stock indices over the past 15 years. Even if we look at a shorter period of time, just a few years, we will see a doubling of the capitalization of the S&P 500 and other US stock indexes. On the one hand, this is another confirmation of the existence of a bubble in financial markets, and on the other hand, the pace of technology development and accordingly their cost is growing very rapidly, thereby increasing the capitalization of companies, primarily technological ones. But one should not rely too much on technological progress and the development of AI, because this can become the very vulnerability that will serve as another reason for the development of the crisis. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.